Alright, hey guys. If you had the ability to control how much money you lose in forex, would you use it? Well, I'm going to think the answer is of course yes. But then why do you hear traders saying that they lose all their money trading? Well, I shouldn't necessarily be giving this information away for free. However, because you guys family and you like, you comment and you subscribe, I'm gonna do just that. This little secret that I'm about to share with you is called risk management. Yeah, I know you probably have heard about it, but do you actually know how to actually use it or even understand what it is overall? Well, in simple terms, risk management is basically the agreed price level at which you are willing to allow the market to move up or down from your entry point. And to better illustrate this, we will just jump onto the charts. Alright family, so you see them here. Alright, so personally I customized my own short and tall and long tool, but when we're going into how to set up trading view and everything, I'll show you how to do just that. But for now, I just showing the example. So basically this is like one-to-one basically, and one-to-one almost. And as I say, risk management is, say your entry is right here. I'm just put it in text. Entry is right there, and the same thing for this as well. Say entry is right there, whether it's a buy or a sell at the market, your entry is right there. So basically how you would calculate this is distance from entry multiplied by the lot size to get how much money you are risking. Is either it go up or it goes down. You see me? Or it goes down. Understood? And the same principle for this one is either it goes up or it goes down. The only key difference really that you might see is that for this, the black part for me is where my stop loss, so at the end of this right here, so where you see the color stops, would be where the market would automatically kick me out if I had a stop loss, and right here in the green would be where the market will kick me out when I reach take profit. And we all know when it's a downtrend, it is so this would be a short order or sell. Oh, we should color code it really. Should color code it short or sell, or this would be a long or a buy. Alright, so as a simple explanation I did was, if the distance from your entry, I go up or go down. Alright, so what we're going to still is that normally it's not beneficial or it don't really worthwhile if you're risking one something to get one something. Normally what I do and normally aim for is a 1 to 3. So if I have a sell, I am going to just know we're going to use the same. We're going to use 10 micro pips, 10 pips overall, and which will be 100 micropips. I'm going to go into the calculations a little bit, but 10 pips, sorry, 10 pips are 100 micropips basically. So what you do is 10 right here, so you can get the micropips right here. So yeah, and it's basically the distance from right here, so which would be entry somewhere right here. So but anyways, um I normally look for 1 to 3. So like how this right now is 10.4, I would aim without even showing on the chart. I would aim to get something maybe about this. So I'm risking 1 to get 3, and for the buy now I'll do the same principle and we'll go up to say 3. Alright, so same thing, same thing. So we're going to know. Alright, so just for demonstration, let's say that right here we were risking say $1. Risking $1 because I showed you guys how we'd risk only $1. What you do basically, you'd have to use a lot side of 0.01, and then you would multiply it by the 10 pips. But when you put in MetaTrader 4, well, how I set up mine, or where everybody set up theirs, when you put in MetaTrader 4, it's going to be by the 100 micropips. So what we do now is we'll multiply by the 100 micropips, and then basically see there, the maths would equal to the same $1 that you plan to risk. But I'll put it down right here. So essentially it's the same principle right here. So I hope you guys can see that. I'll see if I can put something better in the background, make it pop. But green is green. What I'm going to know, I'll just clone it, and it will be the same thing for this one. For the sell one. So for the buy is the same, $1 will be risking regardless. And then so if you're risking $1 here, so you have a 1 to 3 right here. So your risk to reward would be 1 to 3, and 1 times 3 is $3. So your take profit would have allowed you to get $3. Would allow you to get $3 right here. So you risk $1 here to make $3, and essentially is the same thing. Here is $1 here, and it is $1 here, and you stand to make $3. And you probably say, alright, the concept pretty simple enough. We're just going to show you exactly how it be on the actual chart. So we're just going to click one button, bam. So basically say you get the entry here, which essentially isn't the ideal, but I just wanted to use the 10. You get the entry here, just carry this over a little bit, get the entry here and get the sell, and the market would go this way, but this was just for demonstration purposes. Market go this way anyway, but the 1 to 3 I was just wanting to show you the 1 to 3. But what I'll do, I'll just try to go on the chart and find a 1 to 3 utilizing the 10. Alright, so here we have a short. So we're going to just put it, say the market broke and a retest here. So we know about break retest by now. We would have our 10, right here. So and then we'd have our 1 to 3 hopefully. See there, 1 to 3, and that will be for the short. So say there is $1, I make $3 in this trade, For the buy, see if we can get some right here, still one right here, so I bet it. See if we can get better one. Can use this one. This is where we had a double top, although bottom one in this case, and the market started shooting up, and we'll go some bomb. You put the entry. If we can get a 10, a solid 10. So right here, so and we carry down a little bit, carry down the thing down, and then our 1 to 3, see there, 1 to 3, and yeah, basically I'll cover that. So yeah, simple and easy, and I'm going to explain in the other video, but just give a brief synopsis. I'm going to explain in the animation. 1 to 3 is normally the principle I use. If you're risking $1, you know, you stand to gain 3. So yeah, I know it's not much, but you can change that. We're going to still use the same distance of the 100 micro pips, but this time instead of multiplying it by 0.01, we're going to multiply it by 1, and then at this time now you'll be risking $100, but now you stand to lose $100, but in the flip side you stand to gain $300. And in the previous example it was $1 to 3, so essentially it is the same 300% return regardless. But guys, as I say, big risks, big rewards. Either you're going margin call or you're going private jet. So love you guys, and see you in the next video.